Hi, welcome to this video today, which is on the 24th of May. It's Thursday. Today's video, we're going to be looking at trend following big trends. Now, in relation to this, I want to look at some commodity currencies against the USD. So the pairs we're going to be looking at are going to be AUD USD, USD CAD, NZD USD, and USD ZAR. Now, in terms in weekly forecast videos we've done over the last few months, we've been pretty bullish of the USD. USD did have a decent move to the upside, but it's since corrected back. Now, I personally think the correction is a buying opportunity. The big fundamentals, in our view, are heavily in favour of the USD longer term. Now, in terms of the potential in these trades, really good against the risk. Okay, so really good risk reward trades in our view. What we're going to do is go and take a look at all the trade setups, but just before we do go over the charts, just always please keep in mind it is my view as of right now. It can of course change in line with the market action and conditions. If you want to learn all our trading techniques and check out our strategy as well as our daily technical and sentiment analysis of 14 FX pairs, all you need to do, go to the link beneath this video. You get live access to our member center. You can also follow us on Facebook and finally join our Facebook group of traders. Now, in terms of the first pair I want to look at, it is going to be AUD USD. So on AUD USD, for anyone new to our videos, we do not use complicated technicals. They're kept simple. We've always got a bias from the big fundamentals and sentiment behind the chart first, so we just use levels we think are important to big players in the market, i.e. where there'll be big order flow around. Now, in recent months, we've been bearish of the Aussie, and the Aussie did have a really nice fall. We've since had a bounce. We view this bounce as corrective and a really good risk to reward sell. Now, in terms of the big fundamentals and sentiment we feel will drive the Aussie lower, just want to look at some background charts, then we'll go through how you might play this pair if you want to be short like us and you're bearish. Right, let's look at the charts. Just some background charts in terms of why we are so bearish of the commodity currencies. Now, in terms of commodity currencies, they're extremely sensitive to global growth. Now, global growth is slowing. I've shown this chart before in my weekly forecast, but it's very relevant to the commodity currencies. Now, in terms of Goldman Sachs in red, very accurate about their calls in terms of the global economy. You can see they see growth collapsing. They're far more bearish than, let's say, other large central banks, Bloomberg or the IMF. Okay, now the worst is probably ahead. Okay, and if you look at this chart here, it shows various economies around the world and how they're slowing up. Okay, now in terms of this chart here, it's a poll. It's by the Bank of America global fund managers. How optimistic are they about global growth? Their optimism is at new record lows. Okay, it's really bad in the global economy, and we could have a global recession. Now, this one here, hawkish central banks and recession fears grow while inflation and war fears drop. Okay, global recession is now second behind hawkish central banks in the same poll, actually. Okay, we've still got Russia-Ukraine conflict very much in focus, and inflation is still really high. Okay, now in terms of the next chart I want to show, China. China is the world's biggest commodity consumer. These are leading indicators of growth and they're rolling over. Okay, now in terms of China, growth was slowing before they had all the problems with the COVID lockdowns, particularly in Shanghai. China is in big trouble. Okay, and they're doing something now which is very relevant to the commodity currencies. I just want to skip this chart here, which is the US dollar against CNH. That's the offshore spot Chinese yuan. Okay, now what you can see is the dollar came down from 2020. This is a weekly chart. You kind of base out here and then bang, up she goes. So 6.3% that rally. We're looking for 715. If we get up there, that's a 13.5% move. Okay, so that would be a big move. It's already been a big move. Now we know the People's Bank of China, who manipulate this pair, are allowing the USD to rise. Why? Because the internal economy is struggling, and a higher USD and lower yuan will help boost China's export competitiveness. Now, if you look at this chart and the rally, okay, compare it to the next one, which is of the AUD against the USD. So what you have here, a weaker one helps send the AUD down. Okay, so that move, sorry, where have I written it? Oh, there, 6.6%. It's almost the same as the USD move on the one. The one is a major driver of the AUD. You've seen a little bit of a rally in the one, which corresponds with a little bit of a rally in the AUD. So yeah, so we're looking for more downside in this one down to here. That's 14%. Okay, so if the one hits target, that'd be 13.5. This will be 14. So yeah, keep your eye on the one because it will have a big influence. I just want to go and have a look at what it's doing today. Sorry, I just need to skip away from this chart. USD, no, yeah, USD CNH. Sorry, that's the monthly chart. It's got the daily chart. There's the big rally. There's the correction. I think we should steady up between current levels and that double bottom there. Okay, so keep your eye on it. Also, in terms of stock markets, if stock markets sell off, that will add pressure, downside pressure on the commodity currencies. So I just want to look at the S&P 500, and I want the bigger monthly chart. So we've looked at this in our weekly forecasts. We were looking for a break of this 20-month moving average. We've broken lower, and we think we're going down to 3.2. May even go lower than that. There's no good news coming for stock markets. So risk off will weigh on the commodity currencies as well. So that's a little bit of background. Let's now go back to the chart of AUD USD. Right, in terms of the pair, obviously we did have the big downtrend. You always get corrections, I think. This correction is about to run its course. At the moment, we're a little bit underwater on this trade, 69.90 in, and we're against the 71 level. We were this morning. I'll come to the updated chart in a moment to what it's doing right now. Now, in terms of if you wanted to play this one, we always look at the 20-day moving average. If we think we're going to get a big trend, we look for it to break, then look for it to hold rallies. It does there, it does there, it doesn't there. Okay, so we've broken above it. We haven't run away from it though, so we would look to sell back through the 20-day moving average, or if you're coming in fresh, if you look at where our stop is, 71.50. So the risk is not too much. We'll just risk it back behind this double trend line, and then we're looking for 65. That's monthly support, which you saw on the chart I just did, and that I think is realistic. In the longer term, 600 pips downside, with things as bad as they are in China and the global economy. So I think the bounce is a sell. But what actually would happen if we got through here, we got taken out on stop? What would we do? My view would be to sell back through this resistance level, which would then be support if we broke out, and have a stop back behind the 72 level. Obviously hoping we don't break higher. Let's see what we're doing this evening. Not too much really, just still hanging around below the 71 level. Okay, so the Aussie, hoping obviously it's going to go down. Now, in terms of the next chart, right, USD CAD. Now, in terms of the CAD, it's not got a big correlation with China like the AUD has, or the NZD and the ZAR, which we're about to look at, but it is a commodity currency, and obviously it's very influenced by crude oil. Just before I go through this trade set, I want to go and look at crude. I'm looking at the monthly chart now. In terms of the rally from 2000 from 20 up to 109, more than a five-fold increase. The last 3 months has been very strong, or been strong. It's above the 100 level. This is just speculation now, and I think speculators are long based around the war premium to do with Ukraine-Russia supply interruptions. I think that's in the price now. I won't go through the fundamentals in our view in detail of crude oil, but you look at the supply and demand situation. Yeah, crude should be trading back at 80, maybe even lower at 70. Okay, we have got a slowing global economy, and you have got what's called demand destruction with high crude prices impacting on demand. So I'm looking for a big break in crude to hopefully help the CAD get down. But I think the CAD is going down anyway. I think the market's just too bullish on Canada in terms of interest rate rises going forward. I'm not bullish enough on the USD. Okay, so in simple terms, on this chart, I've got double trend line support, first level support here, where we dip back, pushed off. Then I think we've got major support at 127. We pushed up there, cleared, tail through, up, tail back, couldn't get through, tail back, couldn't get through. So I think this is good support. So you can see we're not in this one at the moment. I want to have a stop at 126.70, clear of the support, come in at 128.30. So 160 pip risk, and then we're looking for a move to new daily highs and then up to monthly resistance. The bulk of the media I see on USD CAD talk about the USD going far lower. So I think that is a bullish sign as well. So we'll see with USD CAD. Next one is going to be NZD. USD. Actually, let's have a look at what the USD is doing on the CAD tonight. I think we might be triggered long. Let's have a look. USD CAD. Go to the daily chart. Yeah, it's come up above the 128 level. I'd like to see us run this mid-Bollinger Band, preferably obviously 129. I think we'll get above 120, we'll gain traction to the upside. But yeah, I'm just bullish of the USD. This one's going okay. Of course, we're on NZD USD. Right, we're on NZD USD. I see this chart formation very similar to the Aussie dollar. Kind of a better fall, really. Now you get a corrective bounce that's come above the 20-day moving average, and this morning we were stalling. Okay, my view is if you want to sell this one, good sell through 64 on the 20-day moving average. You can see my level 63.80. On entry, I've got my stop at 65.80 behind this second level resistance. But if we get a nice red, I'll bring it in behind first level to something like 65.30. Okay. I think we're going down to 60, and we probably will overrun that level down to 55 longer term. Okay, so very similar to the Aussie, nice downtrend, corrective bounce, look to sell a break lower. If we were to break above 65, okay, I will bring our entry up to 64.80 and have my stop at 66.30. So I'll play a round number. We're always playing round numbers. Okay, so we'll see what happens with this one. I don't know what it's doing tonight. Let's have a quick look. NZD USD. Not much at all since I drew my chart earlier today. Let's see if we get some action in this pair. Last pair, very volatile pair. USD ZAR, if I can find it. Here, it should come in a minute. Here we go. USD ZAR. Now, in terms of the ZAR, South Africa, very tied to China in terms of trade. It's also an emerging market. It's not a mature economy. It relies heavily on dollar funding. And the Fed are raising interest rates, which is very bearish for all emerging markets. Okay, and risk off. If we get big risk off, it will really hurt the emerging market currencies more so than the majors. But in terms of the chart action, it's very volatile, this one. big move up there. So look at that, bang, big blue up, trying to get higher tails all over the place. Then we've dipped lower. It's not looking good for South Africa going forward. I'm going to take this here as good support and basically just come in above the double trend line. Now, in terms of the target, we've got 18, okay? So there's plenty of upside in this one against risk. So obviously it's off the top of my computer screen. I'll just show you where I got my target from. USDZA. On the monthly chart, I'm going for a move, back up to here, okay? So near enough chart highs. And in terms of this one, like I said, it is very, very volatile. So you only need a small size, okay? You don't want to do too big a size in the exotics. But I really like trading exotics because they can give you really big moves. I think this move here, if you went from there to there, is about, 8%? That's a big move in a short period of time. Hopefully we break out, gain traction to the upside. So there's 4 pairs to consider. I think the risk reward on them is good. We'll see what happens with them, and I'll update them when I do my weekly forecast at the weekend. Right, I think that's everything. So thank you very much for watching the video. Take care. Have a good day.